expectation that the Fed's going to continue to cut rates. That's what's propping up the market. But I do think that we're going to see a decline in the markets. I think what will eventually put in a bottom will be the Fed going back to quantitative easing. But when it does that to prop up the stock market, it's going to crush the dollar and really send gold on a much more parabolic rise. And so even if we get stocks moving to nominal new highs based on Fed money printing, in real terms, priced in gold, you're going to continue to see new lows for the U.S. stock market. Well, first of all, I don't think that many investors have even participated in the gold rally. They may have come in a little bit during the week that gold got almost to 4,400 and then had a sharp pullback. But as we're sitting now around 4,100, I think very few investors actually have any allocation at all to gold. And I do think they'll start thinking about that more next year. But I think over the last couple of years, as gold's moved from 2,000 to 4,000, it's mainly been driven by central bank buying. They are rotating out of U.S. dollars and U.S. treasuries into gold. And I think that trend is going to not only continue, but broaden. I think more central banks that haven't been buying gold are going to start. And I think the central banks that have been buying it are going to buy even more.
The swelling appetite for gold is deeply tied to growing unease about America's long-term financial trajectory. Annual deficits now routinely exceed $2 trillion. And political gridlock has made meaningful fiscal tightening nearly impossible. The perception that the U.S. may eventually rely on inflation or structural devaluation to manage its debt load is pushing global institutions to reconsider their dollar exposure. Adding to the uncertainty, political pressures have intensified around the Federal Reserve, threatening its independence and potentially accelerating aggressive monetary easing. As international trust weakens, gold becomes a lifeboat for countries concerned about both economic volatility and geopolitical fallout.
Well, it's a long overdue loss of confidence in the United States, in the fiscal situation in the U.S., our ability to repay our debts honestly. I think it's pretty clear that we're either going to default or more likely inflate, but there's no way to legitimately pay. The deficits are 2 to 3 trillion a year and rising. We have no appetite for any kind of deficit reduction. In fact, the Trump administration made the Biden deficits that it inherited even worse. And we're chipping away at what's left at the pretense of Fed independence. Trump is stacking the Federal Reserve. Trump is trying to dig up dirt on FOMC members so he can fire them and replace them. We'll see what the Supreme Court says. Maybe the Supreme Court will tear down what's left of Fed independence. Trump is, pounding the table for huge rate cuts and more money printing. And the tariffs, I think, have done a lot of harm. Globally, I think we've made a lot of our friends angry. I think we've driven China and Russia and India closer together as the world unites against our trade war. And that's undermining the rationale for holding U.S. dollars. So I think it's really a race to get out. And of course, then you got the politics. Biden sanctioned Russia, and that was a warning to all holders of U.S. dollars that you could be next, that the U.S. government could, pull the rug out from under you at a whim if it doesn't like what you do. So by weaponizing the dollar, I think ultimately it's going to be the U.S. that ends up getting shot. Oh, I think absolutely. I mean, silver took out 50. That was a huge double top going back to 1980 and then again 2011. Silver got almost to 54 and a half before pulling back, but it's been trading around 50. And, as we speak here, it's over 51. I think we're headed to $100 an ounce on silver by next year. And gold's obviously going to be quite a bit higher as well. But I think that silver is going to start to outshine gold as this bull market moves into a higher gear.
Actions taken by the U.S. in recent years, particularly sanctions and asset freezes, have reshaped how foreign governments view dollar-denominated reserves. When Russia's holdings were blocked, it sent a clear signal to other nations. Political disagreement could put their financial assets at risk. This has accelerated strategic alliances between major economies such as China, India, and Russia, who are actively exploring alternative settlement systems. As trade relationships shift, the traditional dominance of the dollar faces gradual but meaningful erosion. For many countries, accumulating gold is not merely about financial stability, but about reducing vulnerability to American political leverage.
Well, first of all, the company has no real earnings. In fact, it has substantial losses. And what it's doing is it's borrowing money either by issuing debt or preferred stock, and it's just taking that money and using it to buy Bitcoin, which generates no income, and all the earnings is the unrealized gains on their Bitcoin holdings, which are rapidly evaporating. I mean, Bitcoin continues to tank as we're talking. It's trading below $90. MicroStrategy is down about 11 or 12% today. It's down 65% from where it was in November a year ago. And soon, MicroStrategy is going to be trading at a discount to the Bitcoin that it owns. And the minute that happens, the party is over, because the so-called Bitcoin yield that Saylor has been able to generate will now be negative. He won't be able to sell any more stock and create a yield by buying Bitcoin, because his stock will be worth less than the Bitcoin he's buying. And so that's going to start the death spiral, because now he does have interest that is due on debt money that he borrowed, and he has no way to repay it. He won't be able to raise money in the capital markets anymore. He's going to be shut out. The only thing he can do is start selling his Bitcoin. But the minute he starts selling Bitcoin, Bitcoin's going to implode. So this whole thing is, a accident waiting to happen. It's really, a Ponzi or a pyramid built on a pyramid, which is what Bitcoin is. And MicroStrategy has been one of the main buyers of Bitcoin. They've borrowed and sold stock and bought $40-50 billion or spent buying Bitcoin. And his average price is about 74,500. We're not that far above that. He's got a pretty low return. He's been buying Bitcoin for 5 years. He'd have more money if he had bought anything else. Bitcoin's been a horrible investment over the course of the time he's been buying it like that. But the big problem is he can't get out. If he tried to sell, it would collapse. I mean, had he bought gold instead of Bitcoin, he'd have a much bigger gain right now. And if he wanted to realize the profits, he could easily do it. There's no way to realize these paper profits in Bitcoin, and soon the paper profits are going to be gone.
Silver's recent move above long-standing resistance levels has reinvigorated expectations for a powerful bull market. After decades of failing to sustain momentum, the metal finally broke through its historical ceiling from the early 1980s and 2011. With growing industrial demand from solar production, battery technology, and advanced manufacturing, silver is uniquely positioned to benefit from both investment flows and real-world usage. Market analysts now project that silver could outpace gold in the next phase of the commodity cycle. Its comparatively low price and high volatility make it the prime candidate for explosive gains if monetary instability intensifies.
Yeah, when a stock doesn't go up on good news, that's usually an indication that all the good news is already baked into the price, and it's more likely to go down. And that's what's happened with Bitcoin. All the good news is there. We had all the Bitcoin ETFs. We had all the Bitcoin treasury companies. We elected a Bitcoin president who established the strategic Bitcoin reserve. So everything that could have possibly gone right with Bitcoin went right. Everybody thought it was a can't-lose investment. You've got the Trump family behind it. It's their family business instead of real estate. So everybody wanted to hop in that bandwagon. You had a lot of new money come in, and the price did not go up. And that is because the big money, the OGs, the whales who bankrolled the Trump campaign, they used all of that hype to sell, to realize their gains. So the big money was getting out and the suckers were getting in. We've distributed Bitcoin from strong hands to weak hands and leveraged hands. In fact, there's a lot of leverage now in Bitcoin. This thing could collapse very quickly. I think the only hope that Bitcoin would have of getting to 150,000 at all, let alone by the end of the year, you would need a U.S. government bailout of Bitcoin. Now, I guess there's a lot of, Trump people that are, want Bitcoin to go up. There's a lot of Bitcoin people in the administration, a lot of big donors to Trump that will need a bailout. So the question is, will he endure or risk the political capital bailing out Bitcoin by using government money to buy Bitcoin and prop up the price? Because unless the U.S. government buys Bitcoin, I can't imagine anybody else willing to do it at this point. I think all the buyers are in, and now it's just a race for the exits.
The cryptocurrency market is facing mounting pressure as leveraged corporate buyers struggle with declining token prices. Companies that aggressively borrowed funds to accumulate digital assets are now finding themselves underwater as the market softens. Their business models, built on debt and unrealized price appreciation, leave little room for downturns. If these firms begin liquidating holdings, the downward spiral could accelerate rapidly. At the same time, major early investors appear to be distributing supply into speculative enthusiasm. Despite new regulatory clarity and widespread promotional campaigns, recent market action suggests that enthusiasm may have peaked, leaving inexperienced buyers exposed to heavy losses.
I mean, I think we're in a crypto bubble and we're in an AI bubble. I think the AI bubble is bigger than the crypto bubble, but I think the crypto bubble is bigger than the dot-com bubble. So that's a pretty big bubble all by itself. But when you juxtapose it to the crypto bubble, to the AI bubble, it's enormous. But the big difference between the AI bubble and the crypto bubble is at least the AI bubble is based on something real. I think AI is a disruptive technology that is probably going to be much more important than the internet was, and maybe it's going to be the most important development we've ever had as human society. I see tremendous potential to increase the productivity of humans and make our lives better because we won't have to work as much. Maybe we won't have to work at all at some point. We'll have artificial intelligence and also in the form of robots, and they can do the mental work, they can do the physical work, and that could free us up for leisure and more enjoyment. But a lot of this is going to take time to build out. In the meantime, I do think there's a bubble in a lot of these stocks. I think there's going to be a big blow up. I don't think we can finance the rate of investment that we have right now. I think there's a lot of problems. People are looking at all the money being invested in data centers. Where's that money coming from? What are we not funding to make this possible? So I do think that you're going to see a big shakeout in these stocks. But just like with the dot-com bubble, the internet was real. Amazon, came out of that. A few other companies survived, but the majority of them went bankrupt, the vast majority. And I think a lot of the AI, hyperscalers, wherever, I think there's going to be a big problem here. Investors are going to lose money in the short run. But, the AI bubble, at least, and the dot-com bubble were built on something real. There really was an internet that has changed our lives and changed them for the better. And AI will probably be, an even, a bigger, more substantive long-run change for our lives. Bitcoin, however, is nothing. Crypto, by and large, is a complete fraud. There's no real value at all. It's pure bubble. Nothing is going to survive. Pretty much all of these cryptocurrencies are going to zero or close enough to it that it's not going to matter to the people who own them now, whether they go all the way to zero or there's still a few pennies there and people are, trading them. But the whole thing is going to collapse. I mean, there might be, maybe stable coins will have some use. I think, ironically, the what works best would be tokenized gold, right? If you take gold and you make a token backed by gold, that makes sense to me. Because, that's like the old currencies that were backed by gold. Now you can have a cryptocurrency backed by gold. It's a lot better than one backed by the dollar, which is just going to keep falling. Gold, retains its value, but you can use it very effectively as a medium of exchange. So to be ironic that the one thing that might come out of blockchain is tokenized gold, right? So instead of, killing gold, Bitcoin would give it a new lease on life, because I think gold would emerge as a better form of payment, as better money than it's ever been, because the internet or blockchain can make gold much more efficient as a medium of exchange. And it's certainly a lot better than Bitcoin. Bitcoin is slow and expensive to use. and it doesn't have any value to store. So that might be the irony of it. But most of this, almost everything in crypto is just going to blow up. All these companies, all these Bitcoin treasury companies, Ethereum treasury companies, they're all going bankrupt. Every single one of them. They have no viable business model. They all exist because of the mania. Well, nothing surprises me anymore. I mean, look at the gray hairs on my head. I've been around for a while. And, the market's, been going up despite overvaluation. I think it's floating on a sea of liquidity. I think the Fed cutting interest rates and the expectation that the Fed's going to continue to cut rates, that's what's, propping up the market. But I do think that we're going to see a decline in the markets. I think what will eventually put in a bottom will be the Fed going back to quantitative easing. But when it does that to prop up the stock market, it's going to crush the dollar and really send gold on a much more parabolic rise. And so even if we get stocks moving to nominal new highs based on Fed money printing, in real terms, priced in gold, you're going to continue to see new lows for the U.S. stock market. Yeah, so a lot of the tariffs have been rolled back. And so the tariffs in and of themselves are not going to cause this massive recession. They will exacerbate it, no doubt, right? They're making it worse. But I think it's the financial system that is going to fail again, like it did in 2008. I think our banking system is in worse shape now than it was then. I think we're more vulnerable to a big drop in the bond market, a big drop in the mortgage-backed securities. The whole economy is way too levered up. The private sector, the public sector, you name it, there's too much debt. And so I think this whole thing is going to implode as we get a run on the dollar. That's what gold is really telling you. Gold is telling you that a dollar crisis is coming, that a U.S. sovereign debt crisis is coming. One of the reasons that the Trump administration wants the Fed to cut rates is it wants long-term rates to go down. It wants mortgage rates to go down. But they're actually going to go up, and they are going up. The rate cuts have not benefited the long end of the market at all. And in fact, if the Fed continues to cut rates, you're going to continue to get a steepening of the yield curve, and long-term rates are going to rise until they eventually explode when we have a complete run on the Treasury market.
While artificial intelligence remains a transformative technology with long-term potential, investment surrounding it has grown at an unsustainable pace. Massive spending on data centers, chip infrastructure, and energy development has raised concerns about whether current financial systems can support the scale of expansion. This environment resembles previous speculative booms, where a promising innovation became overshadowed by unrealistic valuations. Meanwhile, structural weaknesses in the U.S. banking system, rising long-term interest rates, and a heavily indebted economy point toward an eventual financial shock. When the Federal Reserve responds with renewed liquidity injections, markets may rebound nominally, but precious metals could be the true beneficiaries.